Inflation is a persistent rise in the general price level of goods and services in an economy over a period of time. High inflation can lead to a decrease in the purchasing power of money, which can ultimately harm the economy and lead to a decrease in the standard of living for individuals. Despite being surrounded by countries that have struggled with inflation, Switzerland has maintained a remarkably low inflation rate for decades. In fact, it is one of the few countries in the world that has been able to sustain low inflation over a long period of time. Switzerland's unique approach to managing inflation has allowed it to become a model for other countries to follow. Historical context. Switzerland's early struggles with inflation date back to the 1970s, when the country experienced a period of high inflation. The rise in oil prices, combined with strong domestic demand, caused inflation rates to soar. In response, the Swiss National Bank, SNB, began to tighten monetary policy by raising interest rates. This move helped to bring inflation under control, but it also led to an appreciation of the Swiss franc, which hurt Swiss exporters. In the 1990s, the SNB adopted an inflation targeting framework, which set a specific inflation target that the bank aimed to achieve. This framework allowed the SNB to more effectively manage inflation while also considering the needs of the economy. The introduction of inflation targeting marked a turning point for Switzerland, as it allowed the country to become one of the few countries in the world to sustain low inflation over a long period of time. Switzerland's unique approach. The SNB plays a critical role in maintaining price stability in Switzerland. The bank's primary objective is to ensure price stability over the medium term, which it achieves through a combination of interest rate policies and currency interventions. In recent years, the SNB has also used negative interest rates to combat deflation. By charging banks to hold their excess reserves, the SNB incentivizes banks to lend money and stimulate economic activity. This unconventional policy has been effective in keeping inflation low and supporting economic growth. Switzerland's political and economic stability has also contributed to its success in maintaining low inflation rates. The country's strong institutions, low corruption, and predictable policymaking have helped to create a stable environment that supports sustainable economic growth. Impacts of low inflation. Low inflation has several positive impacts on an economy. First, it helps to maintain the purchasing power of money, which is essential for consumers and businesses alike. When prices remain stable, people can make better long-term financial decisions, such as saving for retirement or investing in a business. Low inflation also helps to keep interest rates low, which can encourage borrowing and investment, and ultimately stimulate economic growth. Furthermore, low inflation can help to reduce income inequality. When prices are stable, wages can increase at a more sustainable rate, rather than being eroded by high inflation. This can lead to a more equitable distribution of wealth, as more people are able to keep up with the rising cost of living. Overall, low inflation is an essential component of a healthy economy. By maintaining stable prices, businesses and consumers can plan for the future with confidence, and the economy can grow in a sustainable way. Switzerland's success in maintaining low inflation over a long period of time is a testament to the effectiveness of its unique approach to managing inflation. By adopting an inflation targeting framework, using negative interest rates, and maintaining a stable political and economic environment, Switzerland has created a successful model for other countries to follow. Low inflation has several positive impacts on an economy, including maintaining the purchasing power of money, reducing income inequality, and stimulating economic growth. As such, low inflation is an essential component of a healthy economy. In conclusion, Switzerland's success in beating inflation serves as an inspiration for other countries to strive for price stability and a healthy economy. By following Switzerland's example, countries can create an environment of stability and growth that benefits all of their citizens.